In business news, the federal government of Nigeria issues 2 saving bonds with the subscription period falling between April 3rd and April 7th, 2023. With 1,000 naira per unit subscription fee, according to the Debt Management Office, the minimum subscription for the bond is 5,000 and multiples of 1,000, with the maximum subscription of 50 million naira. The first bond offer has a 2-year maturity date set at April 12, 2025, with an interest rate of 10.033% per annum, while second savings bond has an 11.033% per annum interest rate, with 3 years maturity date set at April 12, 2026. Payments of interest on the offer will start July 12, 2023, and subsequent payments will be made on October 12th, January 12th, and April 12th, while principal investments will be on maturity dates. In the foreign exchange market, Naira records an all-time year low as Nigeria's external reserves decreased by 0.56% to $35.53 billion. Now, Naira depreciated at the close of trading yesterday by 0.46% as the dollar stands 463 naira 50 kobo against the last close of 461 naira 38 kobo on Friday at the investors and exporters window. Also, foreign exchange market turnover at the I&E window closed at $175.4 million. Analysts at Coronation Research predicts the gradual loosening of the I&E window rate by the CBN and expect only small FX rate adjustments over the coming weeks and months. Well, the International Air Transport Association has warned the Nigerian government that the blocked airline funds will hamper air connectivity, economic growth, and the development of the country's aviation sector. Latest figure from the Switzerland-based Trade Association of World Airlines shows that total amount of foreign airlines trapped funds in Nigeria has risen to $802 million. Speaking during the launching of a Focus Africa, a new initiative aimed at strengthening aviation contribution to Africa's economic and social development, Director General IATA, Mr. Willie Walsh, calls for immediate intervention of the federal government to avoid airlines being forced to reduce their service in the country, which will affect the growth of the industry. Recall that IATA has listed Nigeria as the country with the highest block funds in Africa, and the world lamented that 66% of the funds are in Africa. Despite favorable global oil prices, Nigeria's state of economy remains worrisome. Economic management is not delivering desired outcomes, and even if a crisis is avoided in the near term, long-standing policy and institutional challenges are persisting and severely constraining the economy. Nigeria's economy needs to grow faster to reduce poverty. Accessing the state of the economy of the nation earlier on our show, Business Nigeria, a chief consultant with B. Adedikpe and Associates Limited, Dr. Biodo Adedikpe, puts his position and note down with regards to synergy between the monetary and the fiscal side.
We must have what I call a policy anchor. A policy anchor means there are certain sectors of the economy that want to anchor our development around. We must also clearly separate between economic sectors and enablers. And I'll just mention 3 enablers here that we can all relate with easily. Infrastructure is an enabler. Education is an enabler. Okay? Health is also enabler. They all connect to productivity. So, but the issue now is if you interrogate our GDP and the contributions to it by different sectors of the economy using official data, they also point to you which particular sectors contribute the most to our GDP. And there are 6 of them steadily in the last 10 to 12 years. And that is agriculture. You see there trade, ICT, manufacturing, mining and quarrying, and real estate. And I'll give an example here. If you look at what the Chinese government did in the last 4 months, okay, 2 things specifically to re-energize the economy toward their objective of eradicating extreme poverty. But that's what it's all about. And they came to an understanding clearly from their data that the real estate sector accounts for a significant portion of their GDP. It used to be around 34%. I don't know what it is right now. Okay? So what the Chinese government did was number one, revive the zero COVID policy that will enable now contact intensive economic activities to happen. That's one. Two, they looked at the real estate sector that contributes significantly to their GDP and said, if our economy will turn around, if we truly impact poverty and eradicate extreme poverty, then we need to intervene in the real estate sector. So they approached the banks that were carrying bad and non-performing loans from the real estate sector and provided a fund to intervene in that sector, in which case we can restart growth in that sector in order to restart our economy.
Dr. Adedipe there citing an example talking economic development across the globe. Well, in East Africa, latest central bank data shows that Kenya's reserve dropped by 13.6% to $6.43 billion at the end of March. The nation's foreign exchange reserves fell in 3 months, though through March, as rising costs for imports drained dollars from central banks. The shilling dropped by 4.4% in March, the worst since September 2011, leaving the country to get most of its foreign currency from diaspora remittances. Also, Organization of Petroleum Exporting Countries and Allies moved to cut production by more than 1 million barrels a day from next month and will raise costs of net oil importer Kenya and accelerate its currency decline. Asian stocks uncertain today as investors grapple with inflation concerns in the wake of surprise cuts to the OPEC Plus group's oil output target, while Treasury yields retreated after frail U.S. manufacturing sector data. Earlier today, MSCI's broadest index of Asian Pacific shares outside of Japan was trading steady. Japan's Nikkei stock rose at 0.24%. Australian shares were up 0.1%. China's blue chip edged down 0.16% in early trade, while Hong Kong and Seng Index opened 0.64% lower. The Dow Jones Industrial Average rose 0.98%, S&P 500 gained 0.37%, Nasdaq Composite dropped 0.27%. U.S. Treasury yields are slightly lower today as concerns over economic growth persisted into the second quarter. A yield moves inversely to price the yields on 10-year Treasury notes, which slide down less than a single basis point to 3.42%, while on 30-year bonds slipped 1 basis point to 3.64%. Also, manufacturing activity slumped in March to the lowest level in nearly 3 years as new orders plunged. Now, PMI remained below the 50 threshold for the fifth straight month, a sign of contraction in manufacturing, and ISM's manufacturing PMI fell from 47.7 in February to 46.3 last month, the lowest level since May 2020. However, analysts say activities could decline further due to the tighter credit conditions. Well, crude oil prices posted gains in Asian trade today after OPEC Plus plans to cut more production jolted markets the previous day, with investors' attention shifting to demand trends and the impact of higher oil prices on the global economy. U.S. West Texas Intermediate crude sells at $80.80 and is up 0.47%. Brent also experienced an upward price margin of 0.42%, selling at $85.29. Bonny Light sells at $83.91, recording an upward price review of 7.03%. And for the OPEC basket, crude oil dealers are offering $78.12 with an uptick of 0.76%. That's our package from the business desk.